Okay, real quick this Sunday morning, I want to go over the river indicator that I put out in beta form to the Pivot Point Trading Group. You can see the system and the current special offer through this weekend at proptradingindicators.com. If you have questions on anything, info@proptradingindicators.com. Here's just a day I picked randomly. This is after the 8:32 U.S. Central Time Open. This is and one thing I want to mention, the indicator is a dynamic indicator. We have lots of capabilities. We can run it in a dynamic mode. We can run it in a static mode. But between the three various Renko bar type offerings that we have in our download section, and some of the other, symmetrical Renkos that have an offset set to it that's backfilled so that the Renkos appear geometrical in shape. I call them symmetrical Renkos. There is thousands of possibilities on instrument time frame settings. So right now I'm going to show you just one scenario where somebody might use it for manual discretionary trading, using, paying attention to like key levels or price patterns like M patterns, W patterns. Matter of fact, I just added 4-hour levels charts training to our community training room, and I'm going to add some training today on M and W patterns and related. For those of you that just absolutely don't want to do anything automated, you want to trade manual discretionary, that's fine. So out of the open, we had a bit of a lift. You can see we came back, we had a sweep, a level sweep of the morning's opening low. The low that was made just after the U.S. session open. So that is a level sweep. So when you get lift and you get the river symbol with audible tone, and you have your ATM bracket up, or maybe you have some sort of bracket with your stop target and trail stop mechanism from a third-party tool, you're in the trade and it rips, and you could have been one and done on that. The market came up, cycled just above the overnight session, or I guess you could say the pre-market session, after-hour session coming into pre-market. We had a level sweep, a little slap down. We came up again, did another level sweep, got a slap down from there. Then right here we had an M pattern. So now after a level sweep, we came down, we came back up. We did not test the high pivot. We have an M pattern and rollover starting, and you get a signal. So those are really good opportunities to pay attention to. An M pattern out of a market that just did a level sweep. Then the market trades all the way back, blows out the lower side of the opening range, another level sweep, and we get a setup right after that. There you go. Then the market pulls back, gives you a higher pivot low and a W pattern. So you had an M pattern at the highs with a signal you can use, work the signal. You had a level sweep, you could have worked that signal, bounced off that. Then we came back down, had a higher pivot low, got a W pattern lift, and off we go. And then we had a continuation W pattern and lift for those of you that just want to keep buying the market, as the market had ascending pivots. And by this time of the day, you're coming up to about 10 a.m. I don't even know I'd still be trading. Usually 10 a.m. Central till almost 1 can be garbage at times. But overall, you can do whatever you want. And I'm on kind of a, I'd say a moderate to a moderately low time frame. That would be for somebody that's doing more scalping operations. I could bump my time frame up and do intraday position trading time frame, where basically, I'd see the pullback here in reversal signal, but I'd come up here and I'd maybe only have one slight pullback, lift, and rollover. Down here, probably one lift, maybe a little bit of a higher pivot low and lift. But if you go on higher time frames, what happens is these cyclical areas of price disappear, and then what you just have is the big structural moves from areas where the market's moving from one side of the range to the other, consolidating, and then coming back into the range or continuing. So areas like this would look like from a inverted V pivot there to an inverted V pivot there, and so on. So that's up to you. You can trade on whatever time frame you want. The indicator, since it's dynamic in nature, auto adapts to rapid changes in volatility, so it doesn't care what instrument you're on or what time frame. We can get settings very dialed in for whatever type of trading you want to do, intraday position trading, or maybe somebody wants to do swing trading, or in this case, intraday scalping. Okay, let's go into what would typically be the lunchtime hour, where it's very choppy. And like I said, the indicator can be run in a static mode or a dynamic mode. And I have a lot of videos that I'll be putting throughout the day on how I would use it for the automated strategy that we have coming out this week that will attach to these entry points. And then while it's running, what I typically recommend, let's say somebody sees the potential for a W pattern and they want to get into the market, what I advocate is from your entry point, when you have the audible tone, wherever your entry point is, the least amount of risk you'd ever want to use is the base of the reversal candlestick. So the first candlestick that reverses that has a wick, the base of that. So on average, for a particular instrument, a particular time frame, that distance from entry to the base of that Renko will very likely be very similar on almost every pivot. So it's not that hard then in the ATM strategy to average out, look at a few pivots, measure that distance. Let's say you measure 5 of them, take the total number of the distance and ticks divided by 5, and round it to some even number. There's your stop distance. So now you have your entry. The ATM puts you into the trade. You have your stop. You have some target out, 3 to 1, 4 to 1, 5 to 1, or whatever, out far away. You have a trill stop mechanism as the market's running in your intended direction. At some point, you have a break-even threshold where your stop moves to break-even plus, or you can just have, as price is running away from you, your trail stop is active following. And then eventually you get blipped out right here, but you grab a little piece of every trade. So that's one way. I don't feel like, at least for intraday scalping, you need to have a stop way down at the most recent price pivot, unless you're going to trade really small size, and on general go for bigger moves. So if you're going for bigger moves, you can trade smaller size. If you're doing quick scalping, quick little hit, grab that, accumulate some quick hits, get your daily profit objective, shut down for the day, then that's the stop that I recommend. And you really don't need any more than that. Or probably the tightest stop I would ever use, and it might be a little bit too tight for the way I like to trade, is whatever your average entry to the pivot of the candle before the market changed directions, split that in half. So in the end, that to me seems a little complicated. I just like to average out and have my stop, if I'm trading manual, to be at the base of the reversal candle. So you can see I'm on a pretty active time frame here. And really, in this approach, if I'm trading manually, I'm going to look for something out of the open that I like to see, like a level sweep, a levels test. Right? Start seeing the market offering me higher pivot lows or lower pivot highs. But here, out of the open, had a little bit of a pullback and it took off. Cycled in the range, came back, retested. That is a really nice trade setup to come down, retest the morning low pretty early in the morning, only like roughly 15, 16 minutes after the U.S. session open, and you already got a level sweep with lift. And then the M pattern, very high probability setup there, and the W pattern, very high probability setup. So if you pay attention to levels tests, level sweeps, M and W patterns, as somebody trading discretionary, those are excellent opportunities. So anyhow, there you go. Just wanted to touch upon, I do have the river indicator already put out to the group. There's going to be a lot of content today where I show it on a range of different Renko settings, different scenarios, used in different ways, used in like intraday position way, used in scalping, and then might even today do a video on if you were to use this approach for swing trading, which you absolutely can do also, because the indicator doesn't care what time frame you're on. And it doesn't take very long when you work with bracketed trade entries, meaning you always have your stop and target filled or deployed instantly after your entry is filled, to get one or two little hits and be at 700 per 150K prop account, or be at $1,100 to $1,250 per 300K prop account. It only takes one move where you run 40, 50 points in the NQ, and especially if it's your first trade and you're very close to trading. Let's say you're trading MNQs, you're trading about 5 MNQs. Getting to $700 is not that difficult when you get into a trade and it runs 50, 60 points right away. Or if you grabbing 20 points here, 30 points there, working pattern-based or levels-based trade setups, just keep accumulating those little hits and trade your A+, whatever's your A+ setup, and do that to get your daily goal. The bottom line, though, is I'm putting out an automated strategy to the group so somebody can trade these signals. And right now the signals, I have them set on I would say, closer to a sensitive setting, very responsive to price. I can desensitize the indicator and make it less responsive to price, so it qualifies the pivots where it needs to see a more of a real decisive turn. So all that capability is in the indicator. So like I said, I could go in the NQ and probably find, if I really spent the whole weekend optimizing, like 10 different sets of settings and time frames that work fantastic. I've already been getting emails from some of the group that have worked with my prior systems and are also working with this system, already showing stuff that they've dialed in on and getting ready to hit for the week ahead. Actually, let's go into the indicator just for a second. And here you go. We have multiple settings of adjustability, which I'll cover in the next video, and all kinds of ways where I can be more and more stringent and more defined on what is a reversal where I get an actual signal. So I'll cover all these settings in detail a bit later in the day when I'm back to my trade office and I have a more quieter environment to shoot video. So anyhow, there you have it. The river's out to the group in beta form. Probably put out the automated strategy probably by Wednesday. I'm going to take in some client feedback. There's one other additional filter I want to add to the settings. I'll work with the program on that Monday, Tuesday, get that perfect. Then we'll put out a final version of the indicator that will then talk to our automated strategy. So basically everything will be all out and deployed on the automated strategy side no later than Wednesday. We already have the indicator out, and I'll probably have one revision to it, adding one more feature, or I should say a filter, another filtering mechanism that will set it up perfectly to then use it in conjunction with the automated strategy come Wednesday. So there you have it. If you have any questions, info@proptradingindicators.com. Talk to you all later. And a lot more content will be put out later today on the river indicator and different ways to use it and settings.